So, hello guys, my name is Evangelos Alikis. I hope you have a great day. And in case you didn't notice, there is more bad news on Alibaba. There is more bad news, like every day, more bad news coming from China. And that makes a lot of people scared. One thing you should know is I haven't sold my position on Alibaba. And I actually have averaged down a bit. My average price right now is $162, I think, if I'm not mistaken. Buying more, DCAing throughout time. And today we saw a good drop. The indexes are going down. Alibaba is down pre-market 2.3%, might open like down 2%. So we will see. I will buy a bit. Looks like a good price. First time it drops below 150 in a long time. The 52 week range is 149. So basically this is something like a bottom. Of course it might drop even more. I talked in my Alibaba video about the price that it might hit, and I said it might go down to 122, 125, and I don't expect it and win more between 140. So I think this will be the next stops if it keeps dropping, which I find highly unlikely. I find it unlikely, but you never know with China and with the news that come from there. So what happened? We have an article here from Reuters. We have an article here from Bloomberg. Let's see. Crackdown hit Alibaba to divest 5% stake in Chinese broadcaster. So basically what the Chinese authorities did was force Alibaba to sell a stake that it had on some media companies. This media company wasn't something big. I think they invested something like $1 million, which is nothing compared to Alibaba's market cap, 413 billion. So I don't think that's big news, but of course it panics people and makes them sell, so we have better prices. Yeah, it says right here the larger firm had paid 960 million for the 5% stake on this media company. So why the Chinese authorities did that and are forcing Alibaba to sell some of its media assets? Actually, you should know first that Man and Alibaba quietly have built up a sprawling portfolio of media assets over the years, spanning BuzzFeed-style online outlets, newspapers, television production companies, social media, and advertising assets. Alibaba has a major stake in the Twitter-like Weibo and Youku. I don't even know how to pronounce this. One of China's biggest streaming services. Under the hood of Alibaba, there are multiple high-profile companies, as well as many investment to media companies. I don't think that's a big problem, even if they divest all of those assets, all of those media companies. Because when you think about Amazon, when you think about these big e-commerce giants, it's not the media companies that make them e-commerce giants. It's not the media companies that Amazon owns, which is, I think, the Washington Post, if I'm not mistaken. Correct me down below. It's not the Washington Post that makes Amazon huge. It's its e-commerce business. It's its core business that makes it huge and viable. So I'm not scared from this news. I'm buying even more. I'm buying the dip slowly but surely. You never know with Alibaba, it might drop even more at the blink of an eye. So you just DCA a bit. I just DCA a bit over time more into this company. So I'm not worried, even if they divest all of their media assets that they own. The authorities want them to do that, so they have absolutely no control over the people's beliefs and the people's ideas, and they don't want large tech companies to have a say in that. Basically affect what the people believe and think about the government, about whatever. Anyway, that's all for today. I'm buying Alibaba slowly, I'm DCing a bit. This is not financial advice. I'm not telling you what to do. I'm telling you what I do and what I do in this situation. Alibaba seems very undervalued at 146. It might keep dropping to 140 for all I know, but I'm buying just a bit more, just a tad more. Have a nice morning. I hope you have a great day and see you in the next video.